Hey everybody, and welcome back to Keeping Your Business on Track. Today I have a special guest. I'm here with Mary Cables. How you doing, Mary?
I'm doing great. How are you?
I'm awesome. So Mary's our top loan originator here at Morgan Financial, and she's one of the top loan originators in Brevard County. So Mary, today, our topic today is VA closing costs. All right? So we're going to talk about closing costs with VA loans and everything that surrounds it. So just to start us off, Mary, give us an example or what's included in closing costs on a VA loan? What possible closing costs could be out there?
Sure. So some of the possible closing costs would be lender fees. There could be appraisal fees. As far as other fees, there could be prepaid items such as paying for a year of homeowners insurance in advance or daily per diem interest. Padding your escrow account to pay for future taxes and insurance. Other fees could be from the title company and county and state fees, any survey fees, things like that.
Okay, so there's a fair amount of fees. Now, just out of curiosity, which fees does the lender have control over?
The lender would have control over the things that they charge, such as originations on the loan or discount points, things like that.
Okay, and on a VA loan, who dictates the cost of an appraisal?
The actual appraiser.
Okay. And it's a standard fee, right?
Yes.
So really it leaves on VA loans, the majority of closing costs are third-party fees, depending on the lender and how many fees they charge. But the majority of costs are third-party, like all the things that the title fees come from the title company, the taxes come from state and county, and things like that, right?
Exactly.
Cool. So Mary, I understand the closing costs, but who can pay these closing costs and fees?
Absolutely. So the seller can pay all normal and customary closing costs. The lender could pay the closing costs. There could be an eligible gifter that could pay the closing costs. Even a realtor could pay closing costs, or the buyer.
Okay, cool. And the buyer, you said the buyer can pay them. Can they pay all the closing costs?
They can. There are some non-allowables.
Okay.
Can you go into maybe what some of those non-allowables could be?
Sure. So non-allowable on a VA loan would be, typically, if it's called a fee, typically the buyer's not allowed to pay them. They're not allowed to pay a processing fee or an underwriting fee. They're not allowed to pay a title search fee or a tax service fee. So usually the word fee is a good indicator. They're also not allowed to pay more than 1 point of origination. But the lenders can charge up to 1 point origination to cover their administrative costs, right? So, but they can't do 1 point origination and some other types of fees under lender fee. They can only charge up to 1%. Some lenders charge the full 1% no matter how big the loan is. We don't do that, But there's the appraisal you mentioned. They can pay that, right? The veteran's allowed to pay that, but they're not allowed to pay for a second appraisal for the lender. So there's a lot of things that fall under that non-allowable category.
Got it.
Yep. And so you mentioned the seller can pay all normal and customary closing costs. And, again, normal and customary, it includes a lot of things, but it doesn't include some things like prepaids and escrows. That actually falls under sales concessions.
So give me some examples of sales concessions.
Okay. All right. Sales concessions. Sales concessions, the seller can pay up to 4% of the loan amount in sales concessions. And sales concessions aren't normal and customary closing costs. They're things like if the borrower needed the seller, this is a little known fact, if the borrower needed the seller to pay off credit debt in order for them to qualify, that can actually be done and it'd fall under that sales concession, and it can only go up to 4% of the loan amount. And there are other things like, like I said, prepaids and escrows. If it's a builder and they're throwing in HOA dues, well, that would come under sales concessions. It's a concession in order to make the sale that the seller's making for the buyer. So it gives you a lot of opportunities, opens up some doors for some people that might have just a little bit of credit debt that makes their DTI just a little bit high. Then the seller can pay those to bring down the debt in order to qualify for the loan.
I recently had a real estate agent, referral partner, reach out, and a deal was falling apart with a non-local big box lender. Yeah.
Yeah.
And there was 2 weeks left of closing.
Was this a non-local VA specific lender?
Yes, it was.
Okay. We're not going to mention names though.
We are not going to mention names.
Okay, good.
So they reached out with 2 weeks left in the deal. And what had happened is they were like, can you save this? Well, we have to have all the facts in front of us to be able to see if it was potential. Well, putting it together, our team was able to come up with solutions, and it was a debt to income ratio.
Okay.
We were able to get the seller to agree to give some concessions that we were able to use to pay off the debt, which ended up making them qualify.
Nice. So
and we were able to close them on time.
I do remember that one. And I think everyone was pretty happy at the end.
Very happy. Yes.
It's just, in this day and age, you have to do everything you can to put the deal together. And if it makes sense and it's the right thing for the client, you got to remember that it's not just about throwing a client into a home they can't afford at all costs.
Exactly.
A lot of people think, a lot of people think about their production and their income, but you got to think about the customer and the client. We want to make things work, but we want to make it work in a way that's right for the customer, right for the customer. Bottom line, if the customer's not happy, it doesn't matter, right?
Couldn't agree more.
Yeah. So that's awesome, Mary, that you're able to save that deal. And that's exactly what we're talking about. That 4% sales concessions is made for just that reason.
Exactly.
Cool. So in all this in mind, what do you see going on in the market right now with closing costs and purchase price and things like that?
So as far as for what we're seeing more of now is that there are these sellers are more willing to give concessions towards closing costs in this market. So it's been a much more promising market for our veterans to be able to not come out of pocket to purchase.
Right. And that's a big deal. We look at taking, if you want to make an $8,000 reduction to price, right? We talked about this on a previous podcast where, the difference between paying $8,000 in the borrower's closing costs versus having an $8,000 price reduction. There's a big difference in the monthly payment if you use that sales concession to buy down the rate. But you can also use that that seller contribution, seller contribution, in order to buy down the rate. But you can also use it to reduce the amount of money you pull out of pocket at closing.
Yeah.
So it can be a great thing. It can be a great thing for the transaction. It can put deals together. It can make things happen that wouldn't have happened otherwise. So that's really cool about the VA is they have that flexibility in there.
And one thing I love doing with veterans too, which I learned from you personally, is going through, what buying down the rate does to save them money,
right,
as far as for their monthly, and talking about the recoup.
Right.
So
yeah, to me, it's a function of math. If you're buying down the borrower's rate, you got to make sure the math makes sense. If it costs you $1,000 and you get $100 off a month, $10 you'll be made whole on your $1,000, right?
Yeah.
That makes a lot of sense. But if it's $1,000 to buy it down and it saves you $10 a month, it's going to take you 100 months to make that up. That might not make sense for a lot of borrowers. So that's the kind of math I'm talking about.
Yes, love it.
Cool. Mary, any other thoughts or closing thoughts on closing costs on VA loans?
No, just let us know if you have any buyers that need to get pre-approved. We love walking them through the process, setting good expectations, going through all of this in our loan consultation in advance,
right,
to make sure that we're setting them up right to be able to put in an offer.
Cool. Yeah. Well, that's it. We have a lot of opportunity right now to help veterans get them closing costs, maybe have the closing costs buy down their rate to reduce their payment, or maybe pay off some debt in order to qualify for the loan. So there's a lot of options here. Very exciting. Thanks for joining us today, Mary. Hope you enjoyed today's show. If you have any questions, comments, concerns, put them wherever you put them on this, however media you consume this. And please like, subscribe, and share, and we'll see you next time.